I shared this sell setup on V101S with my premium members and also shared it on my free Telegram channel that I'll be swinging V101S index. So how did I see this trade opportunity? How do I know the market is going to sell from this zone? I caught the sales from this point, from this particular level. I caught the sales at this zone. So I had my first entry at this zone. We had a little retracement and it gave me more entry level. So I got another entry at this particular level. So how did I see this trade opportunity? How did I know the market is going to sell from this zone? And you can see moving in good profit. Everything is moving nicely well. More sales expected, basically long-term sales expected. I got my TP1 at this point, my TP1 at this zone, my TP2 here, and my TP3 at this level. So what's my market analysis on V101S index? We'll be looking into all of that in today's video. So stay to the end of the video to get every detail on this analysis and subscribe if you're new to the channel. And to my returning viewers, I appreciate the support for always engaging in my videos. It really means a lot, guys. Let's do more. So firstly, I went to the weekly time frame because whenever I want to analyze the market, stuff on the higher time frames can be the weekly time frame, the day time frame, the monthly time frame, whichever time frame, these three time frames. But I prefer starting from the weekly time frame, so I'm able to have a view of the week, the coming weeks ahead, and identify my key levels and zones and market structure properly. So when I went to the weekly time frame, I saw that V101S index has been in a range. Basically, we had these two equal highs and two equal lows. We got a low at this point and we got a high at this zone. These levels has acted as support and resistance for some time now. We've seen how the market reacted when it got to this point. Market sold. Before this market reaction at this point, we've had previous market reactions at this same level. The market reacted on this level as resistance, sold, resistance here, sold. The approach on this level again, market sold. We got another approach at the market. So for the market to sell from this level a couple of times, there's a possibility of the market still coming back to this level and selling from it, which we got at this point. We got the market approach this level, this zone. So we have to expect the market to give us more sales in the coming weeks and days on V101S index. And we've seen this identify level of support, how the market has been reacting on it. Market bought from here as a support, bought from here as a support, bought from here to as a support. We've had a couple of reactions on this zone. Whenever the market approaches it, we get the price to the upside. So now we've identified our key levels on the weekly time frame, our level of support and our level of resistance. And we're able to see that the market has been in a range, creating equal highs and equal lows. So I went to the next time frame, that's the daily time frame. So on the daily time frame of V101S index, we got the approach on this resistance level with the sales to the downside. So for the market to approach this same level that it has been reacting on, for the market to approach the same level that it has been reacting on, whenever it gets to it, it sells from it. It's the possibility of the market still selling from this same level. So this market formation is looking nice, market structure is looking okay. We got the approach here. Before this approach, we got these highs at this point, which I have to identify, which I have to take note of. So I identified these highs as a possible bearish structure, a possible bearish formation. Then we got another high at this point, a higher high. So we had a high formation at this point, then another high, a higher high. The market was supposed to give us a new high, a new higher high at this zone. And that high at this point would say, like, for the market to give us a move of this kind, like a break of this last high, creating a new higher high, for the bullish continuation. For the bullish continuation, the market was supposed to give us a new higher high for the bullish continuation, but the market failed to give us this market structure, but started creating lower highs. Then we got these big sells to the downside. The market sold from this zone to the downside. Market sold from this zone. On the approach of this level, it was this massive sell to the downside. Then for the market to sell to this point and reverse back to the upside, it means we have a key level at this point. We have a key zone, which we have to also identify. So we got this level as a key level, a key zone basically. You've seen how the market has been acting on this level as a resistance. The market came to this zone, sold, came to this level again, sold. So we got the market break above this level. There was a break above this level as a resistance broke return support. So for the market to break above this level, there's a possibility of the market coming back to this zone and buying from it, which we got at this point. We got the approach on this level as a broken level of resistance, turn support, the breakout at this point, the retest on it as a support. We got the price to the upside. So on these sells that we got at this zone, the market formed a bearish order block, which is a nice formation, which is a nice bearish formation we needed to take the sells as this zone, to ride alongside with the sells at this particular point. So I identified this market formation here, identified this order block, and waited for the market to approach this level, to give us an approach on this level with some rejections on it to indicate that we are to get the sells from this particular level to the downside. So I got this rejection at this zone. When we zoom, you can see it clearly. The candlestick formation in the time frame, the first approach on this level with this green candle with the weak formation here, then another approach on it, we got this bearish candle, which is a nice bearish formation. So this candlestick formation gave us we got a weak formation at this point. So on this candlestick formation, I had my sell idea, so I had to go to the lower time frame, the 4 hour time frame, to have a clear view of the market. So on the 4 hour time frame, the approach on this level is clearly seen, and we have this option that got broken at this point. We had this mini option that got broken at this particular zone. So everything's aligning. The bearish structure, the bearish market formation is matching up with our analysis. So everything is aligning. This uptrend that got broken with a bearish order block formation at this zone. I had to take myself at this particular zone with my stop loss above this market approach on this level, my stop loss above this market structure. So I shared the sell signal at this zone. Was expecting the sell. I had to have a big stop loss because this is a swing trade position. The analysis was in day time frame basically. I had to have a wide stop loss for any retracement. So we got this retracement at this point. I took my sales basically at this zone. It's clearly on the 1 hour time frame. I took my sales at this particular level. We got the market retrace back to the upside. So I had to identify this level as a possible level we could expect the market to reject from. So I got more sales at this zone. My stop loss was still at the same level. I still had my stop loss at this zone. And see the market is moving nicely well, in profits. Our first TP level is at this point. Our first TP here, our second TP at this zone, and our third TP at this level possibly. So that's how I took the sales on VOLATILITY index. This is a swing trade position. More sales expected in the coming hours and days. As it basically working with market price action from the higher time frame down to the lowest time frame. I analyzed from the weekly time frame. I was able to identify the market structure and market formations on the weekly time frame. I had to scale down to each lower time frame, day time frame, the 4 hour time frame, the 1 hour time frame for my entries. So I'm moving in good profit basically. I'm moving this stop loss below this second entry I had at this zone. My stop loss will be below this level to safeguard this second entry. Then on more sales at this point, I'm moving the stop loss below this first entry to be safe in the trade, so I can be able to hold the trades comfortably. So that's it, guys. That's how I took the trade on VOLATILITY index, working with market price action. So smash the like button if you enjoyed this video and subscribe if you're new to the channel. To my returning viewers, I appreciate the support for listening, engaging my videos. It really means a lot, guys. Let's do more and do have a wonderful day. Peace.